You just spent 100 rupees. But where does it actually go? The shop buys its stock from a supplier. That payment becomes the supplier's revenue, and the supplier has its own costs to cover. You hand it over, and for a moment it seems simple. You bought something, the shopkeeper received your money, and the transaction is finished. But the story doesn't end here. That same 100 rupees is now part of the shop's money flow, waiting to move again. But the shopkeeper can't simply keep that money. The shelves must be refilled, workers paid, and suppliers settled. So the money moves again. That product came from somewhere else. Behind this small shop is a chain of suppliers, warehouses, trucks, and businesses. And this warehouse is only one layer. Behind it are larger suppliers and manufacturers, producing the things that eventually reach your hands. And behind that product are factories, workers, materials, and energy. Your 100 rupees helps support this entire chain, even if you never see it. To make one simple product, someone needs materials, machines, electricity, and time. And every one of those has a cost. So that one product supports more than one person. Workers, suppliers, transporters, and businesses all depend on the value created along the way. And the business has bills too: transport, equipment, rent, and wages. Money earned from one sale helps keep all these parts moving. But moving goods is only half the story. Behind every modern transaction is another invisible network: banks, payment systems, and digital records. That simple confirmation hides a lot of work. Systems verify the payment, record it, and settle the value between the right accounts. Here's the catch. 100 rupees of revenue isn't 100 rupees of profit. The business still has costs to pay. But the supplier doesn't work alone either. It pays for materials, transport, energy, equipment, and people. The chain keeps branching. And those materials have a story too. Before they reach factories, they may pass through processors, transporters, energy systems, and other industries. And suddenly, one small purchase looks much bigger. It connects factories, workers, suppliers, transporters, and businesses across the economy. So where does business revenue go? Some keeps the shelves stocked, some pays people and expenses, and what remains can become the business's earnings. And what remains after the costs is profit. But even profit can move again, back into the business, into savings, or eventually to the owner. And when a business spends or reinvests, someone else earns. That new revenue can be spent again, creating a cycle that keeps economic activity moving. Now zoom out. That same cycle is happening across an entire city, millions of times, through countless purchases, wages, services, and businesses. And the city is only one piece. Roads, railways, factories, farms, and ports connect millions of businesses across an entire country. And sometimes, the chain crosses borders. A product sold here may depend on materials, components, technology, or manufacturing from thousands of kilometers away. But there's another problem. Countries use different currencies. International businesses need a way to convert one currency into another before value can cross borders. That conversion has a price, the exchange rate, and it moves as supply, demand, interest rates, trade, and expectations change. And behind that system are institutions that shape monetary conditions. Central banks use monetary policy and other tools to help maintain monetary and financial stability. And here's another surprise. Most money in modern bank accounts exists as digital balances. Your bank records what you own and what the bank owes you. And here's the strange part. When a bank makes a loan, it generally creates a matching deposit in the borrower's account. New bank money has appeared. And the reverse can happen. As loan principal is repaid, the corresponding bank deposit is extinguished. Money can disappear too. So where did your 100 rupees go? Nowhere and everywhere. It became part of a system far bigger than the purchase itself.